President Trump this morning is touting the new trade tariffs that are set to roll out this week. He says the new tariffs will hit all countries, not just those that have the biggest trade imbalance with the United States. This is on top of those auto tariffs that went into effect last week. Listen.
We're going to raise about $100 billion with the auto tariffs alone. What we're going to do is, in the new tax bill that has to pass, it absolutely has to pass, we're going to provide tax benefits, tax credits to the people who buy American cars. This is a genius thing that President Trump promised on the campaign trail. So that's going to happen. In addition, the other tariffs are going to raise about $600 billion a year, about $6 trillion over a 10-year period. And we're going to have tax cuts. It's the biggest tax cut in American history for the middle class, for the blue collar.
All right, so that's the administration's line, but new CBS polling shows Americans' views of the economy are souring. Most say President Trump has focused too much on tariffs, which they believe will end up raising prices, and he hasn't spent enough time lowering prices, or at least attempting to lower prices. So let's bring in CBS News White House reporter Aaron Navarro, who's tracking developments for us this morning. Aaron, remind us exactly what tariffs will be implemented on Wednesday.
Vlad, good to be with you. If you remember, President Trump, a couple weeks ago, paused tariffs on Canada, on Mexico, 25% tariffs on a wide swath of things from agriculture to clothing. That will resume on April 2nd. But the main thing is reciprocal tariffs. This is something that President Trump has been talking about for a while, where essentially the U.S. will match tariffs levied by other countries. Some countries that have big imbalances with the U.S. include Brazil, India, and Vietnam. But Trump has also looked to Europe as a region where the imbalance is pretty high. The U.S. will be matching those tariffs, though Trump told reporters last night that he will, quote, be more generous than people are expecting, suggesting that there could be exceptions that could be worked out between the U.S. and other countries. And later this week on Thursday, there will be that 25% tariff on auto cars and auto parts made outside of the United States. That'll impact nearly every vehicle, since there aren't many that are completely made within the United States.
CBS polling, Aaron, we told our viewers, shows that more than half of Americans think that the president should be focused more on the price of goods and trying to lower those prices. How is he trying to sort of quell those financial fears that people have out there now?
Yeah, and a slight majority, 55%, believe he's focusing too much on tariffs, not enough on lowering prices. There's an increase, too, from January of people who say that Trump's policies could make them financially worse off. Obviously, a departure from when he ran in 2024. Trump has said that fixing the trade imbalance between the U.S. and other countries, which his base has called for, is a positive for the country. His continuous call from him and the administration for industries and manufacturers to move inside the United States, create jobs, is another spin that they're putting on. And you played a clip of his trade counselor, Aaron Navarro, the administration's expectation that they will be able to extend his 2017 tax cuts, and that will help lower the middle class individuals inside the U.S. is also a reason that they think this tariff war will not impact people as negatively as some of the stock prices are showing.
Yeah, but now, Aaron, has the president sort of responded to the fact that he can cajole these companies to move their factories and manufacturing here to the United States? But that's going to take years. And in the meantime, we could see lower prices. We could see even a recession. So how's the president addressing that?
Yeah, that seems to be why they're leaning so hard on the tax cuts, which they're hoping to pass in the next couple of months or weeks. But that certainly is something that he has not addressed specifically, just generally that he believes that the U.S. is, quote, entering a golden age. But you're right in that many consumers within the country who will be impacted by these tariffs this week could take a while to actually see that effect.
All right, Aaron Navarro reporting from the White House this morning for us. Thank you very much. Let us bring in CBS News contributor J.D. Durkin to talk a little bit more about this. So first of all, J.D., how are the markets responding to this?
Yeah, not very positively, Vlad. We've had this really a series of knee-jerk reactions, and of course, the S&P 500 is coming off of a correction, which is defined as a 10% pullback off of its recent highs. And we had those highs in the market on February 19th. And then we had recent lows down at March 13th. And quite frankly, a lot of agita in the system. Every time there is a new suggestion or a new announcement of a tit-for-tat tariff policy out of the White House, you tend to see markets sell off in reaction. And then whenever the White House or the Commerce Secretary, Mr. Lutnick, or others, or Treasury Secretary Scott Bessent come out to the microphones and say, well, maybe the president's willing to pull a few tariff punches and things may be less scary than previously expected, we tend to see the markets rebalance. But all of this is a repricing of risk across the stock market. And I think a lot of the pain is being priced in before the damage actually occurs, which, as we know, is set to go into effect Thursday morning at 12:01 a.m.
So, as you also know, the president announced these tariffs on foreign vehicles, but the head of the United Auto Workers Union says down the road, this could actually be a good thing. Let's play some of that.
We've seen over 90,000 manufacturing facilities leave the United States. We've seen, in the big three alone in the last 20 plus years, 65 plants have closed. Tariffs are a tool in the toolbox to get these companies to do the right thing, and the intent behind it is to bring jobs back here.
All right, so that's the head of a union, and you can understand, of course, why a union chief would want those jobs back here in the United States. That means more jobs for Americans, which is a good thing. But the bottom line is the reason why those automakers first moved the manufacturing overseas. Explain that to our viewers, why that became necessary, and secondly, what are we looking at in the short term? Because it takes years to build up those plants, to hire those people. Trump might be out of office by the time all this goes into effect.
It's a very long runway for capital investment, Vlad. These announcements are very exciting, and they might move markets in the short term and certainly gin up a lot of enthusiasm. But to actually build these manufacturing plants, that cost of capital is a very long time before it ultimately gets realized. I think the major automakers, like a lot of other major American companies, have recognized, especially if they're publicly traded companies, their best bet at revenue and forward-looking earnings and guidance is to offshore as much production as they possibly can. And let's be clear, the big three automakers, their stocks, at least through the lens of the market, Vlad, they've gotten hammered year to date. GM stock is down 10%. Stellantis, which makes names like Dodge and Chrysler, that stock is down 13%. All of this says nothing about the Tesla conundrum, Elon Musk's company, which is down more than 35% year to date. No big surprise that the big three, which includes GM, Stellantis, and Ford, were able to get a bit of a reprieve off of those tariffs, that kind of 1 month delay. But those pressure points are certainly going to be in effect. And I think much like the rest of the market, investors are in wait and see mode for the actual specifics, because here we were going into yesterday sort of assuming that it would be a basket of countries that would be on the receiving end of the tit for tat tariff policy. And yet we had the president there on Marine One say, well, really, you need to start with all countries. And that accelerated losses in the stock market into this morning. So we continue to wait and see. And I think everyone, including the major automakers, they really want that clarity on what tariff policy is going to look like moving forward.
Yeah, historically, trade wars don't benefit anybody, as you know, JD. But let's ask, how is this affecting, or how will it potentially affect monetary policy vis-a-vis the Fed?
Well, we still got a handful of meetings left. I think the next one is coming up on May 7th, so about 4 or 5 weeks away. The central bank is going to be in an interesting position here, because it might be unthinkable to investors in the market or market participants that the Fed may actually be forced to raise interest rates. But of course, if there is a deterioration in labor market conditions, if something goes sideways, or if we have an unexpected spike in inflation, that will probably force the Fed and their hand to consider another short-term interest rate hike. Not what markets want, and the forecast from the Fed is still expecting probably 2 rate cuts between now and the end of the year. But we have a consumer who is spending less than they have. So we're seeing consumer spending drop. We're seeing credit card debt on the rise, credit card delinquency on the rise. And Vlad, as you talked about at the top of the hour, just the state of consumer confidence is down. People feel very sour about their personal economic situation. That could translate to a pullback in consumer spending, which, as we know, accounts for 70% of the entire American economy. So even those feelings, those perceptions of unease will likely have some pretty significant economic repercussions, at least in the next couple of quarters.
Some stark numbers there. JD Durkin breaking it down for us. Thank you, JD. Appreciate it.
Thank you.